Yeah, look, I think the big picture for banks, to put banks in perspective, and I've been also going around doing my full year results, and people have actually been asking about a lot about the banks. People may remember that Kerry Packer tried to buy Westpac in 1993. What he was trying to do there was buy Westpac at 90 to 95 cents in the dollar. So he was trying to buy Westpac for below NTA. Fast forward to now, Westpac is trading at 3 times NTA. So there's $1 of NTA, and it's trading at $3. The reason it's got there is because mums and dads are happy to pay $3 for $1 of assets because they're getting 5.5% fully franked yield. So of course, the impetus is for the banks to keep doing that until they get the NTA price differential as high as possible, till it gets completely out of whack. And then actually what happens is you start to have a few bad and doubtful debts, and a few mortgage in possession sales, and suddenly your $1 million loan that you've lent someone that you're earning a $20,000 margin, interest margin on, suddenly you take a $250,000 hit on the capital. And that's when banks get extremely dangerous. So everyone is looking for the same signs. We're all looking to see does full employment deteriorate? When do we see unemployment? When do we see these people working in the resources sector no longer able to pay back the loans on their houses that they bought in speculative areas because they don't have jobs? When do we see this follow-on effect start to affect secondary and tertiary businesses? And all of these things point to the cycle of a bank, and in particular in Australia, the cycle of a bank's share price. So at these high prices, at these high multiples, we of course have been saying this for a long time, but we have to be a little bit careful. So where does it lead eventually? The high fully franked yield in a bad or doubtful debt scenario is unsustainable, and then you can no longer pay out that level of a fully franked yield. And of course we already know that their banks are paying 2.2% if you put your money in the bank, but you can get 5.5% fully franked yield, which is a much bigger number. It's about 7 or 8% grossed up. So that's already 4 times interest rates. So we're in a very interesting time in history. We've seen interest rates go from 17.5% to 2.25% over the last 20 years. Now, I'm not saying that interest rates are about to go back up, but we're definitely closer to the point when interest rates start going up. And when it does, all these interest rate sensitive stocks come under pressure.
How high is that NTA in historical perspective?
As high as it's ever been. These are extremely high premiums to NTA.